The crime has already been committed. You just haven't felt the full impact of the sentence yet. In 2020, the U.S. Federal Reserve printed $3.4 trillion. That was nearly 20% of all U.S. dollars in existence, created in 12 months. They told you it was a rescue package. They lied. It was a transfer mechanism. That money didn't evaporate. It didn't disappear when the pandemic ended. It migrated. While you were distracted by stimulus checks and meme stocks, the smartest capital in history began a silent exit. They are leaving the paper economy. They are leaving the dollar. Look at the scoreboard. By January 2026, gold shattered historical resistance, trading above $4,600 per ounce. This isn't a bubble. This is the currency dying. Since the year 2000, the U.S. dollar has lost 27% of its purchasing power. Gold has appreciated 530%. This is the great repricing. The elites are selling the future, tech stocks, AI dreams, and fiat promises, and they are buying the present, land, water, gold, energy. They are building a shield, a hard asset shield, and if you are not inside the walls when the gate closes, you are the yield. Official data is a sedative. They tell you inflation is cooling. They cite a consumer price index of 2.7% for December 2025. But you don't live in a spreadsheet. You live at the register. Since 2020, the cost of a standard grocery basket has risen by 28%. The price of eggs, up 86.5% by mid-2025. They hide the rot with shrinkflation. Toothpaste tubes in the UK shrank from 100 mils to 75 mils, a hidden price hike of 105% per unit. They are stealing your standard of living by the ounce. The money supply growth has stabilized at 4.27%, but the damage is structural. The liquidity is trapped in the system, waiting to ignite, and the people who own the world know it. Every magic trick needs a distraction. While the currency rots, the public is being sold a new religion, artificial intelligence. By 2025, retail investors, the middle class, were pouring $155.3 billion into stocks in just 6 months. 93% of AI investors said they plan to buy more regardless of price. This is the liquidity trap. You are buying because you think it's the future. They are selling because they know it's the top. Meet Jensen Huang, the CEO of NVIDIA, the man selling the shovels for the AI gold rush. In September 2025, he sold over $40 million of his own stock in just 3 days. He wasn't alone. Throughout late 2025, Huang offloaded hundreds of millions in equity. When the architect of the revolution is cashing out, you should be terrified. Jeff Bezos, Amazon, he set up a plan to dump 25 million shares by May 2026, value $4.75 billion. Mark Zuckerberg, selling Meta stock to fund a $270 million compound in Hawaii. The insider buy-sell ratio collapsed to 0.29 in mid-2025. For every dollar insiders spent buying their own stock, they sold 3. This is a distribution event. The smart money is not shorting the market. That's too risky. They are simply selling their overvalued paper to you. Goldman Sachs projects a $1 trillion capital expenditure gap by 2026. Sequoia Capital data indicates the industry requires $600 billion in annual revenue to justify current GPU spend. Actual revenue is $75 billion. The wealth transfer is the only realized profit. They have your cash, you have their JPEG-generating stocks. Now let's see where they're putting that cash. If money is broken, you buy things that can't be printed. You buy the soil. Bill Gates, the tech mogul, now the apex predator of American farmland. Through shell companies like Red River Trust, he has amassed 270,000 acres across 18 states. In North Dakota, he bought 2,100 acres of prime potato farmland for $13.5 million. Locals were furious. They tried to stop it using corporate farming laws. They failed. The Attorney General approved the sale. Why? Because farmland delivers 10.5% annualized returns since 1990. It is inflation-proof. It is recession-proof. Bill Gates isn't becoming a farmer. He's becoming a landlord, a feudal lord in a polo shirt. J.P. Morgan isn't far behind. In late 2025, their arm Campbell Global bought 28,200 acres of timberland in Oregon. They manage $10.1 billion in timber. They own the lumber for your house. They own the carbon credits for your guilt. They monetize the air you breathe. But there is an asset more critical than land: the blue gold, water. This is the most cynical trade of the decade. Private equity firms are weaponizing drought. Look at Greenstone Resource Partners. Greenstone bought 500 acres of farmland in Cibola, Arizona, not to grow crops, to strip the water rights. In 2018, they severed the water from the land and sold it to Queen Creek, a wealthy suburb 200 miles away, for $24 million. They made a $14 million gross profit. The farm in Cibola, sterilized, dry, dead. The water flowing to fill swimming pools in the suburbs. This is the model. Buy the land, strip the water, sell to the highest bidder. Since 2015, private equity has executed 435 water deals globally. A 2025 RBC Global Asset Management report confirms the strategy. 96% of institutional investors plan to increase allocations to water rights and arable land. The Colorado River has lost 10 trillion gallons since 2000. As the supply shrinks, the price creates millionaires. They are consolidating the pipes, too. The $40 billion merger of American Water and Essential Utilities created a monopoly with pricing power over your tap. When private equity owns the water, you don't just pay for the liquid, you pay for their yield. You pay for their quarterly targets. Hydration is now a subscription service. The accumulation of assets isn't just about greed, it's about fear. The billionaires are preparing for the event. Mark Zuckerberg, he's built a $270 million compound on Kauai. It's not a vacation home, it's a fortress. The plans include a 5,000-foot underground shelter, concrete blast doors, independent energy, food storage. He owns 2,300 acres surrounding it. It is a sovereign state within a state. If Hawaii is too close to the action, they go to New Zealand, the ultimate bolt hole. Peter Thiel, the data mining billionaire, acquired 477 acres on Lake Wanaka. He planned a bunker-style lodge carved into the hillside. Sam Altman, the face of OpenAI, the man building the utopia. What is he doing? He admitted to stockpiling guns, gold, potassium iodide, antibiotics, batteries, water, and Israeli Defense Force gas masks. The man telling you AI will save the world is packing potassium iodide for radiation poisoning. That should tell you everything you need to know about the fragility of the system they are building. This is the bunker economy. They are insuring against the very chaos their algorithms and monetary policies might unleash. They break the world, and then they retreat to the safe room. While they build bunkers, you build debt. The direct consequence of the hard asset shield is the destruction of the American dream. By 2025, the median rent-to-income ratio in the U.S. climbed to 32.8%. You are mathematically rent-burdened. In Miami, rent takes 40.4% of your income. In New York City, 54.6%. You work until July just to pay for the roof over your head. Institutional investors like Blackstone claim they own a small percentage of homes, less than 1%, they say. It's a statistical lie. They concentrate their fire. In markets like Atlanta, institutional investors controlled nearly 25% of single-family rentals as early as 2022. They use cheap debt to outbid you. They turn starter homes into rental portfolios. They reduce the supply, drive up the price, and force you into a permanent subscription model for shelter. But even the giants bleed. The Starwood Real Estate Income Trust faced a liquidity crisis in 2025. Investors tried to pull out. Starwood said no. By June 2025, the fund hit a backlog of $850 million in withdrawal requests. They gated the fund. This proves the asset class is illiquid, but for the billionaires, it doesn't matter. Connect the dots. They sell you the future. Tech stocks, AI hype, depreciating dollars. They buy the present. Farmland, water, gold, energy. This trade is a short position on the US dollar and a long position on survival. The window is closing. As institutional capital bids up the price of the physical world, the real economy decouples from the paper economy. Those who stay in paper assets risk having their wealth inflated away by the next wave of printing. Those who hold the shield will own the scarcity. The transfer is already underway. The AI bubble is the dazzling spectacle that keeps your eyes glued to the screen, while the ground beneath your feet is sold out underneath you. The only question remaining is, how much of the world will be left when the music stops?